we are here to talk about Gap Trading 101. Let's everyone pay attention to the first slide. It'll make your life easier, and it'll actually make my life easier too. Gap Trading 101, the webinar is going to start at 1 p.m. Eastern. We're at 1:03 right now. Yes, this is being recorded. It will be posted in 48 to 72 hours. Just give me a yes that you understand that. That way I won't have to answer 800 people, 900 people, 1,000 people asking that same question. So we got that handled. All right, cool. We'll get that out of the way. So let's move on to the next slide. And I was going to do a survey for this GoToWebinar event. And the title of it is, who else wants to discover a better way to trade gaps? So I've been trading gaps forever, a very, very, very long time. I started out and traded gaps. I still trade gaps to this day. It's actually the only trade that I did today was the gap trade. And I'll share with you how I did that. And it's super simple, and I've got a little checklist and stuff and how I go through and I grade what gaps to take, what gaps not to take, which ones to go with, which ones to go against, and all that stuff. And it's super simple if you just trust the setup. If you don't trust the setup, though, it's going to be horrible for you because you're going to be like, well, that's great and all, but I can't pull that off. So we're going to talk about how to trade gaps. Gap Trading 101 by myself. Now, here we go. All right, so first and foremost, let's get this out of the way. So this is the blanket disclaimer that I am required to use. I think my disclaimer is way better than their disclaimer, but warning, important notice, no representation. I'm not going to read this whole thing. I'm going to just read it. Here's my blanket disclaimer. I can't guarantee you anything in trading. I can't guarantee you anything in life. The only guarantee that I will make you is you will probably lose a lot of money trying to learn how to trade. That's the guarantee I can give you. And some of you, a lot of you, will lose all of your money trying to learn how to trade. So for the love of God, make sure that you're not trading with more money than you can afford to lose. Does everybody understand? This is a very risky proposition. It's we're all big boys and big girls. We're trading with real money here, and we're trading with leveraged products. It can go against you. You can lose more money than what you have in your original stake in your account. So just be careful. Read the disclaimer, and like I said, you'll never hear me make a guarantee of any kind other than I guarantee you lose a lot of money trying to figure out how to do this business and make money. It's a tough nut to crack. No joke, it definitely is. So just be careful out there. And that is my 2 cents. I'm going to take this pin off here if I can figure out how to do it. There we go, arrow. All right, cool. All right, we traders are a bit crazy, all right? And I don't know if you suffer from this syndrome or not. And the syndrome I'm talking about is the crazy squirrel syndrome. So crazy squirrel syndrome tends to be like, okay, you see a nice shiny object, like an indicator, okay? And then you're like, squirrel, nut, new nut. Squirrel, nut, new nut. Oh, nut over here. Oh, squirrel, nut. So if you suffer from being squirrel brain a lot, one piece of advice I would give you is just settle down a little bit, take a few deep breaths, and settle into yourself and go, okay, how's this trading gig really work? Why am I running around like a crazy squirrel searching for the new nut? Okay. And why am I not focusing on the basics, the foundations of, okay, I got to have a decent trading plan. I got to stick to that thing, and I should be executing that thing on a daily basis. And if I'm not, what's going to happen is, have you ever seen what happens if you're going down a road like this and there's a squirrel that jumps into the middle of the road and he stops right here or he stops right here? And then he's not sure what to do. He's not sure whether to run back this way, and he's not sure whether to run this way. And what happens to poor squirrel, right? The thump. All right, he gets ran over. The same thing's going to happen to you if you don't settle in and really understand what trading is really about. It is a real-time auction process. Some people want to buy it over here. Some people want to sell it over here. And it is your job as a professional trader or as a speculator to come in here and see if you can get on the one side of the bid ask, or if you can let your setups work for you. So just try not to be the crazy squirrel, and it'll make your life a little easier. So let's cover these questions. What is a gap trade? So before electronic, now, are these slides updating correctly? Because I can't see them. I don't know what's on the screen. Before electronic trading, there was this crazy thing called a pit, where human beings physically would get in a pit, and there would be, there would be these people crammed in a pit like this, and they would be screaming like, buy this at even, at a half, at a quarter, and there would be people in the pit that traded, and that's called the cash session, okay? So before electronic trading, for most of the E-minis, the gap is considered a 9:30 open and a 4:15 close, all right? This is PM, and we're talking about East Coast times, all right? So all this means is back in the day when I first started trading, there was pit traded contract, and then there was an elect traded contract, all right? Now that we're in, this decade, almost everything is electronic. Almost everything. And most things trade, 23 hours and 15 minutes. Some of them are only closed down for 45 minutes during the day. So the pit session is from 9:30 a.m. till 4:15 p.m. and it's calculated. Let me remove this ink here for just a second. It's calculated from close to open. So in other words, if the market closes here, then the next day it's going to open either higher from that close or lower from that close. All right, that's how you're calculating a gap. So there is no real gap, all right, because now everything is traded electronic. So when you run across some people like, I don't understand what's a gap. What's a gap? That's what the gap is. That's where most of the volume used to be in the cash session from 9:30 to 4:15, and it's still where a lot of the big institutions still like to play because they want to swim in deep water. They don't want to swim in a very shallow pool because you think of it in the terms of liquidity. If you're going to dive into a 9-foot pool, you're probably going to be okay diving in. If you try to dive into a pool that's got 2 feet of water, you're going to hit your head. So that's why a lot of institutions and stuff wait on that stuff. Now the markets trade about 23 hours and 15 minutes a day on the E-minis, and they're only down for about 45 minutes. The Russell's down for about 2 hours. It closes at 6 and opens back up at 8. But that is a gap. Now, does everybody understand what a gap is? Who does not understand what a gap is? Because if you don't understand this concept, when we move on to the more advanced stuff, it'll kind of mess your head up. So I just want to make sure I don't want to leave a man behind here. Looks like everybody's yeses. I'm not seeing any no's. I don't understand the gap. And I'll go over the concept in a little bit more detail as we go along. All right. Why are gaps important? The reason gaps are important is because they tend to fill a lot, okay? In other words, they kind of act like open windows. So if you have a gap up situation or if you have a gap down situation, they tend to fill a whole lot of the time. And if you know how to trade them, you could potentially make a lot more money if you know how to trade gaps the correct way. All right, so that's why it's important and why you may want to look at trading gaps. Now, the most common question I'm going to get is, what markets do gaps work on? Now, gaps work on a lot of different markets. What I'm going to talk about today is the E-minis because I know you probably trade the E-minis. All right, these things actually work on stocks too, but you kind of have to skin that cat a different way. No offense to cat lovers out there, but you kind of have to skin the stock gaps a little bit different than you do the E-mini gaps. All right. Remember what you're trading. If we're going to be talking about the E-minis, and E-minis by nature are going to do this: run, stop, reverse, run, stop, reverse, run, stop, reverse, run, stop, reverse. So that's going to be an E-mini. It's going to go run, stop, reverse like that. It's not, as a rule, going to go run, consolidate, run, consolidate, run, consolidate. That's more of like gold or bonds. So E-minis tend to be sloppy and choppy in nature. So just remember the nature of what you are trading, because it is fairly important. Gaps work really well on the Dow. They work really well on the S&P, the ES. They work really good on the NASDAQ, and they work pretty good on the Russell too. So those are the 4 E-mini contracts that I recommend that you trade gaps on. Okay. All right. Next slide as soon as it'll advance. How do I fix my charts? And I'm going to go through and show you how I do it on TradeStation. And I know there's a lot of people in here that use TOS. I think there's a setting that you can do it to where it'll just show you the gap too. I don't know what that is, but we can definitely figure it out and shoot you a video if you're not familiar with it. If anybody is familiar with the setting on TOS, just type it in here and I'll pass it on to all the rest of you you swimmers and TOS users. So in TradeStation, it's pretty easy. All you're going to do is you're just going to go at and then whatever symbol you're using. So if you're using at ES and then just do at ES.D, that will do it, okay? So it should be at symbol dot D is what it should say right there. So if you're going to do it at ES.D, you can also go at ESM13.D. That'll do the same thing, okay? So that'll give you your symbol. So if you're looking for that on TradeStation, you could go at YM.D or you go at YMM13. It'll basically do the exact same thing. One of them is the overnight session, one's a day session. Okay, so super easy. You can, I don't know what the question is there. You can hide this also. I think you can. I'm not sure where my questions are going. I think my questions are going to the top instead of the bottom. Let me see here. Yep, hold on just a second here. Questions. Give me just a second, guys. My GoToWebinar is freaking out a little bit on me. Aha, there you go. So, I like your analogies. iPad app didn't show slides. All right, you're funny. How about Forex? Gaps work really good on Forex on Sunday. They do. So, I haven't been able to review your questions. So, what I'm going to do, in TOS, you turn off Show Extended Session. You go Chart Settings, Future, Uncheck Showed Session is how you do that, if anybody's wanting to know. And I'll write up a little report and do a video for you. All right, so if you've been asking questions, they've been going to the wrong spot. I just figured out where they were going now. All right, so we'll figure out a answer to that one for you here. Okay, let's see here. Thinkorswim, so you're going to go to Style, Settings, then under General tab, go to either Futures and Equities and uncheck. Use Check Showed Session, so that's how you do that. And like I said, we'll do a video. We'll figure it out for you. Make your life a little easier. All right, these are some answers you're going to need to know, all right? You are definitely going to need, why do we need to fix the charts? So you can actually see the gap. And I'll show you an example of that in a minute. It's just going to make your life a lot easier. Can we trade the S&P, the diamonds, the QQQs, and stuff like that? You can. It's designed just for the futures, but yes, you can. These are important answers that you're going to need to know, important questions you're going to need to know in order to make profit on this trade, all right? So the first questions you have to ask yourself is, type of trend the market is in now. So let's go through a sample. Like right now, is the market in an uptrend or a downtrend? So this is a question you're going to have to ask yourself. I would say we are in an uptrend, okay? So let's discuss just a little bit about that example there. So if we know that we're in an uptrend, and which one do you think is going to perform better? If you're doing a situation, is a down gap going to fill a higher percentage of the time, or is an up gap going to fill a higher percentage of the time if you're gapping up or down? So in my opinion, and all the research that I have found and done, is if you get a gap down situation, that's called a gift. On a massive uptrend, gap downs will tend to feel better than gap up will. A gap up will still come down here and fill it and then run up. But sometimes you'll get a pro gap where it gaps up sideways and keeps on continuing without you. So you definitely want to make sure that you know which way the trend is, because it's going to be important to your decision factor on what you're doing with the gap. Like if you get a gap up, you can be going, man, it's just going to have a higher potential of being a gap and go situation instead of a gap and give it up type situation. So you need to know that, all right? And then you have to know is there a gap? You have to be able to answer that question. Is there a gap? And how big is the gap? Okay. If it's sideways? If the question is if you're sideways, you do nothing. If you're in a sideways trend, you have no advantage. Therefore, you do nothing. You have to know, number one, what is the overall daily trend of the market is right now. You have to look at the open at 9:30. Is there a gap? Yes or no? And then you have to say, okay, how big is the gap? And then what you want to do is you want to ask yourself, what day of the month is it? All right? What day of the month is it? And this is really what you really want to know is it the first day of the month or is it the last day of the month is what you're really looking for? Because the first day of the month, it just sucks. The percentages on it are terrible. The last day of the month is just phenomenal, really, really good. number, and that's why you want to know that. And then you also want to know what day of the week it is, Monday, Tuesday, Wednesday, Thursday, because they all have a little bit different. And you also like day of the month. Are you in options expiration? Are you in rollover? Are you the Friday after rollover? Are you on the Monday after rollover? All those things will affect how you actually trade the gap and whether it's going to increase or decrease the fill ratio. So you got to know your numbers, all right? So what day of the week is it? And then you really, really have to answer this question. Is it worth the risk? All right. Is the risk worth the reward? If you have a 10-point gap, you know, if you have a 5-point gap, you know, it's not really worth it. 8-point gap, you know, 10 to 15 points on the Dow is worth the risk for me on the trade. You know, anything less than 10 or 15 points is really not worth my time. So that's one of my pat rules. It's got to be greater than or equal to 10 points. 10 points on the Dow. All right. Where do we get the day of the week and the day of the month information? If you'll hold on to your socks, I will share that with you in just a second. And then last but not least, what's your plan? What's your plan of attack here on the gaps? Are you going to be a trend trader and you're going to buy all the gap downs? So does everybody in here know what the word fade means? Because a lot of times when I use the word fade, it confuses people. Okay. So fade just means if you're in, if the market gap's down, you're going to fade that. You're going to buy that. If the market gap's up, you're going to fade that. You're going to short that. You're going to go in the opposite direction of whichever way it's gapping. Yeah, it's a counter trend trade. Exactly. But if we have a massive uptrend and we get a gap down, we are fading the gap down, but in reality we're buying a pullback and hoping that it continues higher. So it's not a total counter trend trade. Where'd my mouse go? There it is. All right, let me remove the ink really quickly here. Okay, why is my slide not advancing? That's kind of weird. There we go. All right. All right, this is important. Before I get to any of the stats, this is super. Can we trade the gap on GC? Yes, on Sundays. Yes, I would do it on Sundays. I wouldn't do it after that though. On average, 76% of all gaps close at some point during that day. This is a huge distinction, and I want to caution you that please do not look at 76% and say, oh my God, I'm going to be buying my private island, 76% trade. That's awesome. I can just quit my day job. That is not what this means. What this means is, let's say you had just a good old-fashioned uptrend, and let's say this thing gapped down 40 points, okay? It gapped down 40 points today. It could still go down. It could still go down another 200 points, okay? And then reverse and end up filling that gap for the day. Does everyone understand that? Just because it hits it 76% of the time does not mean it will not go higher or lower from which it gaps. Okay? Huge important distinction. If you don't understand it, you'll start trading gaps and going, well, God, this thing's moving away from me. And I thought he said they fill 76% per time. You have until 4:15 p.m. for that sucker to close. So that's a lot of time to pass. So if it gaps down 40 points and then travels 200 points and then ends up, closing the gap on the day, that's still considered, cha-ching, a successful gap fill, okay? There you go. So I just want to make sure. That's what that means. That's why I was going over that, and I want to make sure that I'm completely transparent so that you know exactly what you're going into and what you're getting with these numbers, all right? All right, so let's go through some gap statistics that are going to be useful to you. So in this example, this is a swath of 2 years of data, and it was taken from the S&P. So on one S&P point is equal to about 10 points in the Dow. And what the research shows is 1 point in the ES will fill 93% of the time. So this would be a 10-point gap on the Dow, okay? And you'll hear me talk about the Dow a lot. And it's not so much that I hate the ES, it's just that I prefer to trade the Dow because I get super cheap clearing rates on the Dow. And because I own a futures brokerage firm, I can pretty much set my own commission, plus I have a seat for the Dow, so I get a very, very low rate to trade the Dow. And if I'm doing something larger or bigger that needs liquidity, I'll do it in the S&P or the bond market or something like that. But if I'm just doing, little tiny scalping, less than 30 contracts, I'll do it in the Dow. Okay, so that's the numbers. The next number is a 2-point gap up or down on the S&P is going to fill about 90% of the time. That's going to be about a 20-point gap on the Dow, a 2-point gap on the S&P. 30 points or 3 points, 30 points on the YM. I'll put the YM over here. And this is going to be the ES right here. It's going to fill 82% of the time. 4 points, which would be 40 points on the Dow, and 4 points on the S&P, 86% of the time. 5 points or 50 points is 60. 6 points is going to be 77. 7 points, 71% of the time. And then after that, it just falls off the face of the earth. So this would be 50 points. This would be 60 points, and that would be 70 points. Now, if you really, in my opinion, if you start getting above 60 or 70 points, this is where I would draw the line, because here you have a real high percentage. Then it has to jump this chasm of 60%, and then you got 70 and 71%. And those just didn't happen as often. So if you want to be the best play, would if it's above 4 points or 40 points, you might want to think about not doing it. Now, to be 100% transparent with you, I trade almost every gap there is, regardless of the size. And the reason I do that is because I've been trading gaps for 18 years. I have no problem throwing a trade on the open with the gap. I know exactly how much I'm risking. What I'm trying to show you today is a lower risk, potential higher reward type trade setup where you may not have to trade every gap like I do, okay? All right. These are when it fills in the full, not a half gap. That is correct. All right. Here's the other numbers that you can see on the research. And over here, a lot of people kind of gravitate like, oh, 22 points fills 100% of the time. 17 points, 100% of the time. It only happened one time, and it's just a ghost. So size of the stop. I'll go over the size of the stop here in a minute. Do you have the same stats for half a gap fills? I do not have the same gaps for half a gap fill, but what I can tell you on the half a gap fill is it fills about 82% of the time. What days of the week work best? Mondays fill 65% of the time. Tuesdays fill 75 or 77% of the time. Wednesdays fill 79% of the time. Thursdays 82, and then Friday at 78. So I have made up a little cheat sheet, which I'm not sure what good it's going to do you, but I mean, here's how this is a cheat sheet that I have. It's just got a tear sheet, grade the gap checklist. So if we had let's say we had a Thursday. Can everybody see this cheat sheet? This is just a PDF. If we had a Thursday at 82% and we had 4 points, you can see 4 points, 86%, and Thursday 82%. So these are the gap stats. These are the warnings, and this tells me here's why I'm sticking to my plan. And then what I can do is I can just sit here and go, is there a gap, yes or no? Is it worth taking? Yes. Type of trend, up. Gap of direction, down. All right, I get that. +1, +1, +1. Day of the month, last day of the month. What's my stop? What's my target? What's my overall plan for the trade? So this is just a cheat sheet that you can use as a checklist, okay? And it's just a PDF that I made up really quick. In order to, you can just go through, so you don't have to go through all the slides. So, does the gaps checklist only apply to stock indexes? This one does. I'm only teaching you stock index futures today because I only have an hour, and I'm only going to be able to teach you one actual strategy on. I'm actually going to share two with you if I can power through the presentation. All right. So, things to look out for. So on my cheat sheet, do you see this right here on my cheat sheet where it says Monday after options expiration drops 13 to 65? This is the warning. These are the landmines that you want to avoid, and that's covered on this slide right here, okay? So if you see Monday after options expiration, the gap drops. The Monday after options expiration, the gap drops for 13%. So it was 65% fill, now it's a 52% fill. That's a pretty good drop. I mean, double-digit drop, you really got to pay attention to that. And then Friday after rollover, the gaps drop 15%, okay, double digits, from 78 to 63%. Expiration, quarterly expiration, yes. First day of the month sucks. All right, that's an elegant way of saying it. It only fills 56% of the time, so you want to avoid that at all costs. Okay, but the last day of the month works great. It fills 85% of the time. So there's some cheat sheet notes for you that you can use at your disposal. You've got to know your numbers. And if you know your numbers and if you know how to trade, or if you have some decent skills, this will help you out. 76% of all gaps close in the same day. All right. We already talked about the advantages and disadvantages of that. It can run with you or against you. All right. So you got to know, you have to have good entries. Half a gap fill happens 82% of the time. And I'm going to show you a trade that I did today. And it's the only trade I did today. I only did 4 contracts. It ended up netting us $195, which is not a lot of money. But it's also, I didn't take much heat on the trade either. I think I only took about 10 ticks of on heat before we actually hit our target. Okay. Will you send us the presentation slides? I don't know. I have not decided. I actually made new presentation slides last night. I was up till, I think, 4:30 last night making these new slides. I revamped the old presentation to kind of deliver it in a better fashion. So how do the slides look? Do they look better than the old slides? Are they nice and crisp and clear? And hopefully it's a little bit better than the old presentation. Time for a nap. It is time for a nap. No joke about it. All right. So gap fills, half a gap fills 82% of the time. And the reason this is important, if you are a trend trader, you're going to try to go for that half a gap fill. If you're a trend trader, you're going to try to go for that full gap fill. But if you're a counter trend trader, what does that also tell you? At half a gap fill, you could short that with a tight stop loss, and that thing may fail and roll back over. At a full gap fill, you could short that with a tight stop loss. That may roll over. So they're good for both trend traders and counter trend traders alike. Okay. The sweet spot for this trade is 40 points. If you're trying to go for more than 40 points on a gap fill, you're kind of a pig. Okay, so you're just being a little piggish. Just note it and just say, ooh, this gap, it's got another 200 points to fill. Heads up, you're being piggish. You're just trying to just take too much. All right. So you can see that my dyslexia got me. A 40-point gap fill is the sweat spot, not the sweet spot. How do you spell sweat? S-W-E-A-T. I think did I spell sweat and sweet wrong? I definitely did, didn't I? So a 40-point gap fill is the sweat spot. Okay. You're just going to start sweating bullets at that point. No, I just misspelled it. It should be sweet. S-W-E-E-T. I think that's how you spell sweet. So slides look sweet. Is the 40 points for the YM? Yes, so that would be 4 points on the S&P. That is correct. All right, large gap ups. If you get a large gap up or large gaps of, say, 60 or 70 points, my recommendation would be use a 25% stop loss. So let's say that you had a 100-point move in the Dow. What would your stop loss be if you gapped up or down 100 points? It'd be 25 ticks, right? Let's say that you had a 200-point move like we did the other day, then your stop loss would be 200 times 25, which would be 50, okay? I'm just going to tell you, this is optimized data. So this is called curve fitting, all right? And curve fitting is where you try to just manipulate the data so much that you try not to get ever stopped out, and you only try to get the really good trade. So if you're into curve fitting, larger gaps, 60 or 70 points, use a 25% stop loss. Doesn't it depend on your target? It does, but we're talking about bigger gaps in this situation. When you're using larger gaps, when you're trading larger gaps, cut your size down to a half or a quarter. That way you can use these larger stop losses, okay? So don't trade. Let's say you trade 10 contracts, okay? Then what you'd want to do is on this one, you would either want to trade 5 or 2 or 3 contracts on a big gap of, say, 60, 70, 100 to 200 points, all right? What's a stop for the smaller gap? I use a fixed stop for what I do. Anything, what I'm willing to do is I'm willing to go to a gap trade, minimum of 2 times, maximum of 3, or a minimum of 1 time, maximum of 3. I use a fixed 20-tick stop loss, or 2 points on the S&P. So 20 points on the Dow, 2 points on the S&P is what I use. Okay, all right. So 5 steps to better gap trade. So let's go through these. How do we know there is OEX and rollovers? There's OEX rollovers just by when options expire, and you can just go to the CBOE website and there's an options expiration calendar. You can also just call your broker. They'll tell you when options expiration is. And when rollover is happening right now in March. It's usually the second or the third Thursday of the month that you're trading. So March is our new contract. And if you're ever confused on that stuff, always just call your broker. Say, hey, when does this contract roll over? And then you'll know the Monday after rollover or the Friday after rollover. You'll know what those are. What is the link for the CBOT? You mean the CBOE, not the CBOT. The link, there's this crazy tool called Google. It's been around for a while. You go to Google and type in CBOE options expiration calendar, and it'll just magically appear for you. CBOE.com. It works for equities or just futures. It will work. We're talking about index futures. I would have a total different presentation for gaps on stocks. Okay, yeah, Google it. Please answer. If you're asking questions and I'm not answering them, just keep asking them, because there's almost 1,000 people in here, and we just got to be careful with the questions. Didn't realize gaps are so frequent, Hubert. Does the time frame have something to do with it? No, not really. Gaps happen all the time. All right, so I'm going to power through the presentation, and you guys keep on asking questions, and I'll answer them at the end of the presentation. I think you'll get more of it out of it. All right, so number one, keep your risk low. Keep your risk low. Number two, keep it simple. Do not overthink it. If you overthink it, you're going to lock up like that little squirrel on the road. And what happens to the little squirrel on the road? And he's like, left, right, no left, no right. Oh, God. Right? That's what's going to happen to you. Keep it simple. Don't overthink it. If you're trying to overthink it, you're just trying too hard. Okay? And usually the smarter you are, or the smarter that you think you are, and this is going out to all the smart people out there in the audience, the smarter you are, or the smarter you think you are, the more money you will lose. Can anybody identify with that? Somebody give me an amen on that one. The smarter you are, or the smarter you think you are, the more money you lose. And here's why. All right. And I suffer from it with you, so it's not a big deal. I'm not pointing fingers. The reason, if you think you're smarter, and I don't think I'm smarter than the average person, I just think I don't think I'm stupid. I don't think I'm slow. Even though I talk slow, that does not mean I'm stupid. I think that most people that try to better themselves think they're relatively smart. All right, you may, and it's a competitive thing. Like, I can't do that. Well, sit down here. I'll show you I can do that type thing. The smarter you think you are, or the smarter that you actually are, you have more fear. The reason you have more fear is because you're thinking too much, because you're thinking up of all the angles, everything that can possibly go wrong. You're like, and for somebody, have you ever seen somebody that has never traded before, and they just throw a trade on and it makes money? They're like, well, how'd you know how to do that? I don't know. It just looks like it's going up. So I bought some of it, and it just went up. And you're sitting there going, well, in the love of God, do you know there was 9 things that could have killed you right there? No. Why? What were those? Well, there's an economic news release that's coming out in 2 minutes by the time you put that trade on. Well, I didn't know. So it's the knowledge usually makes you more fearful, because the more information that you know, the more things that you know will go wrong. So that's why the smarter you are, the smarter you think you are, it's harder to trade. So what you got to do is just got to just puke it out and just go, okay, simple, simple, simple. Keep it simple so you can react. You have to have a checklist to grade the setup. If you don't, you're going to be destined to failure. So you got to have a checklist. You want to make sure that you're scoring the gap on that cheat sheet. You could score the gap. You could go +1. You could go 0. You could go check, +1. Okay, I got a +3. I can do the trade. And just keep it nice and simple. And you have to have really, really, really simple entry, exit, and stop rules for the trade. If you don't, what happens is right in the middle of the trade, as you're trying to do something, you will lock up like the squirrel in the middle of the road, and then you just can't do a daggone thing about anything, and you just lock up. And that's really not what you're here for. You're here to execute good trades. So those are your 5 steps to better gap trades. Best ways to enter gap trades. You're going to wait for 9:30 a.m. Eastern time. 9:30 a.m. Eastern time. So everybody write this down so we don't get a lot of questions. And evidently the slide works, because I haven't had not one person ask if this is going to be recorded. That's awesome. How far in advance can you do all the prep work? I mean, you can get prior to the gap opening. It's only going to take you 5 minutes. I mean, 2 at the most, a 5 if you're just really slow and just don't understand stuff. And I don't mean slow-minded. I mean if you're just slow, just looking up all the information. Do all stock indexes open at 9:30? Yes. Most of them, yes, for the pit sessions. So you're going to wait at 9:30 a.m. East Coast. If you're in an uptrend and you get a gap down of 60 points or less, you are going to enter on a 50-tick chart, and it's got to be set to a 24-hour time frame. The reason you want it set to a 24-hour time frame is because that will allow the indicator to cheat a little bit. If you've got it set to a 9:30 open, it won't start calculating until 9:30. So you want the 50-tick chart to be cheating for you. You want it to be calculating. You want it to be calculating when you're looking for the indicator. All right. You're going to enter long when you have 2 blue TTM bars. All right. Now for Thinkorswim, I know TOS won't let you go lower than a 133 tick chart. So here's how you get around that. What you do is take a look at this rule right here. We're looking for 2 50-tick bars. 2 times 50 equals what? Even with Kentucky math, I can do this one. It is 100 ticks, right? So if you're a Thinkorswim user, all you have to do is use one 133 TTM trend bar, and that will do the basic same thing. All you're doing is you're just going to require 33 more ticks. Okay? What if we don't have the TTM indicator? I'll get to that in just a second. All right? I'll get to that in just a second. Let's keep on moving on. All right. Now, a logical question that I'm getting right now in the audience is, what is the TTM trend? This is what the TTM trend does. All right. So what we're looking for here on the TTM trend, let me change the color of my ink here really quickly so that I can talk about it intelligently. So what it does is it looks back 6, change colors to the ink, please. How do you do that? Black, here we go. It's looking back 6 bars, all right? So if this was bar number 1, this would be 2, 3, 4, 5, and 6. And what it does is it takes all these bars, it takes 1, 2, 3, 4, 5, 6, and it averages them up, okay? Averages them up, and then it divides it by 6, and then it comes out and goes, okay, and gives you a number, all right? And then whatever that number is, if the next bar closes above the 50% range of those 6 when you add it up, it's going to change colors from red to blue. Does everybody understand? So it's looking back 1, 2, 3, 4, 5 bars, 6 bars. It's going to calculate it up, average the 6, and then what it's going to do, let's say that the number was 100. What would be half of 100? All right, half of 100 in most countries is 50. All right, a half. 1/2 of 100 is usually 50. So if this number right here was 50, then as soon as this thing went to 51, this color of this bar would change. Okay? Everybody got it? And that's what the TTM trend is looking for. So here's what it looks like in TradeStation. It's formatted to a 6 bar look back period, and it's super easy. Don't worry, you're not going to have to. It's not going to be required that you buy the indicator. On most platforms, you can find it, and I'll show you in just a minute how you can find it. Okay, you can use a Heikin-Ashi or a Heikin-Ashi and stuff like that. In TOS, it's included. We've licensed them our version of it at Trade to Markets. What time frame? 1 minute, 5 minutes. I'll get to that in just a second. So let's go through the gap trade setup rules. Okay, so a long trade is if we get less than a 60 or 70 point gap down, we go long. Okay, check. When we have 2 blue TTMs on a 50 tick chart, we can go long. Check. We use a 20 point stop loss. Your targets are going to be plus 10, plus 20, and plus 40. Okay? You're going to scale out every half, quarter. And I'll show you exactly what that means in just a second. When target 1 is hit, you're going to move your stop from entry minus 20 to entry minus 10. All right. Then you're going to keep an eye on half a gap fill and a full gap fill. Keep it in mind. Keep a half and a full gap fill in mind because those are your numbers. Also, what should you keep in mind? That the 40 point is the sweet spot of the trade. So if you're in a trade and you're in a gap and you've already made 40 points, you're playing with fire, okay? Because the sweet spot's 40 points. So there's a checklist for the gap trade setup rules. So let's go through a trade real quick. I did not cherry pick any of these trades whatsoever. I just went back yesterday, the day before, and the day before that. If they worked, they worked, and if they didn't work. Fair enough? And then I'm also going to show you the exact one that I did today in the live trading room. And I'll show you exactly how I did it, what checklist I went through, what parameters I used, how I got out of it, and everything. Super, super easy. So I don't want you to think that I'm cherry picking any of these. I hate people that cherry pick. They kind of freak me out. So the first thing we're going to look for here is, do we have a gap up or a gap down? You can't see it on this chart, but this is a gap up situation. All right. So what we're doing is at 9:30. All right. So at 9:30 here, you see this one right here? You see this yellow dash mark here in TradeStation? That means I've got a gap. And I'll show you how to do this in just a second. So the very first thing that I do is go, okay, do I have a gap up? Yes or no? Okay, am I in an uptrend or a downtrend? I'm in an uptrend and I have a gap up. Oh, okay, I need to short that if at all possible. Great. Then what I'm going to do on a 50-tick chart, see this 50-tick? Set to a 24-hour time frame. I have to wait until I get 2 of these little red bars in here. You see this number 2 here? That's bar number 1. That's bar number 2. Does everybody see that? That's number 1, and that's number 2. Right there. So I would short it at this point, all right? So we short it here. I'm using a 20-point stop loss right up here. This is my stop. And then my target is going to be plus 10, okay? And then my other target down here is going to be plus 20. What do you notice on this chart? As soon as I initially shorted it, it went against me, right? It went against me. If I shorted it right here, boom, it went against me. If I shorted it down here, it still went against me. But I shorted it right here on this white line, okay, right here. It immediately went this way. There's no way I would have got a fill there, not by 1 tick. No way. There's no way in any world is that ever going to happen. But on the next move, boom, I got my first target filled, right? There's my first target, target 1. Target 1 is filled right here. And then the market rolls over. I'm sorry, that's not target 1. Hold on, let me back up. Let me remove my ink. I got switched around on the trade. Let me show you here. Erase all ink. All right, there we go. All right, so the short's at point 1. The stop loss is here. Why is that doing that? And then this is target 1. Target 1. Here's target 2. This is the entry. This is the stop loss. Okay? So on the first trade, I got target 1 hit. And then after that, after I take off half at plus 10, I bump my stop from here down to here. So I made 10 points, and then I lost 10 points. So that was a scratch trade for me. Does everybody understand? Let's go through one more example. Here's another example. Huge gap down the other day. 318. See the chart? Like I said, I'm not cherry picking any of this. First, we had a massive what? We're in a massive uptrend. We had a huge gap down. It's probably the first thing that you're going to be thinking is like, oh my God, this is probably a pro gap. It's probably going to be a pro gap. There's no way it's going to fill. That's great. Follow the rules though. So we have a gap down at 0.1. At the open, we have 2 blue TTM bars. Does everybody see that? So I'm required to go long here, not because I want to, but because I have to. So I have to go long right there at the open. My stop is 20 points lower. There's target 1, and there's target 2 at that point, and then I can go half a gap fill and a full gap fill at that point. Half a gap fill is probably right in here. Does everybody understand the methodology of what I'm doing? What does a pro gap mean? Pro gap means that it gaps and goes and doesn't really give you an opportunity to mess with it. A pro gap would be where it gaps up or down and just keeps on going in that direction and really doesn't come back and give you the opportunity. There's different versions of pro gaps, but a pro gap means that it didn't fill during that day, or that it gapped up and cruised off and left you. Those are the definitions for a pro gap. All right. Now you can also, how did you add how to add tick bar on toss? You're going to have to use a 133 tick chart for toss because they won't let you go below a 133, I don't think. Some people say they'll let you use custom, but I don't know how low they'll let you go below custom. I know that they will give you a default 133. So let's go through one more trade here. So you can also use the climactic volume indicator, which is an indicator that I developed up for a better way of looking at volume. Now look here, you've got a gap up situation. Here was the close. Here's the open. Okay, there's the open. And I'm waiting. Boom. So in this case scenario, I've got up volume, followed by low volume, followed by low volume. And then this signal here is telling me, okay, you're probably okay shortening at that point. So then I could use a 20-point stop loss and then see if I'll get it to fill. And that one actually worked out pretty good too. So that's another way. The custom on toss still does not allow you to go less than 133 ticks. So you're going to be stuck with a 133 tick. That's not a big deal. Don't sweat it, guys. If you're toss users, do not sweat that 133 ticks is different than 250 ticks. It's only 33 ticks. Don't sweat it. It's not a big deal. Don't fret over being a dick for a tick or fighting over a teeny, be a weenie for a teeny. In other words, all right? It's not that big of a deal. Just keep it consistent and you'll be okay. All right. All right, so there's an example. Here's another example on the exact same day that we just looked at. We had a gap down situation, huge volume at the open. Then we had, boom, a reversal signal that said, all right, you're probably okay getting long here. And then you can see, nice little gap fill. That's just the climactic volume indicator. So let's go live. Let's heck with talking about charts. Let's talk about one that I did today, all right? So here's a live shot of the gap that I traded today. Well, I've got this zoomed in so you guys can see everything. So you can see that I made $195 on this trade. I'm going to show you exactly how I did it this morning because I think it's more to your advantage to watch the stuff that happened as opposed to just PowerPoint. So, and all I traded was 4 contracts. All right. So I'm going to move that back out to the side. Here's what I did. I was looking for. Well, where's my mouse at? All right. So on this case situation, number one, let's grade this together. Now, this is where audience participation is going to take in effect. Are we in an uptrend or a downtrend? And here's the gap. You see, this is where we closed. You see this? So let me show you this really quickly. Let me know if you can see me drawing on the screen. Can you guys see? Hold on just a second. I want ink, color. What? Okay. Let me know if you can see me drawing on the chart right here. Do you see that right there? Yes. So that was the close of yesterday. And this is the open of today. I believe we're in a massive uptrend, or let's not even call it massive. So, yeah, that was a 415 close. Okay. And here was the 930 open. Okay. At that yellow line. So I know I've got a gap. I know I'm probably in a decent uptrend. So the likelihood of this gapping down and filling, is it good or bad? So we're sitting here going through a checklist going, okay, decent. I got a good chance it's going to fill. It's probably a gift. What is today? What is the day of the week? Monday, Tuesday, Wednesday, Thursday, but today's Thursday. I know from just trading them, it's got good odds, right? Okay. Expiration week, but I mean, I'm still on Thursday. All right. All right. Plus we did open up and the trend was 2.0, but now how many point gap up or down was that? Does anybody know? I don't even know. I don't even remember from this morning, but here's what I will do. I will just throw a horizontal line on from TradeStation and I'll guesstimate it. So it's 408 to basically 737. So how many points is that? So from 73 to 08, what is that? How many points? 35? Is any way you slice it, it's less than 60 or 70, right? I think in most countries in the world. So we got a decent trade setup we can do here. So now all we have to do is we just have to wait for the setup to come to us, and here's how you do that. Okay? I'm looking for the 50 tick chart at 9:30 a.m. to be what color? I got to format my indicator here. Hold on. I got to go back more bars. Let's go back 1,000 bars. Okay, now I'm going to go back here in time and go zzz. Here we go. We're getting close. I got to go back a few more bars. I just didn't go back enough bars. No. Don't need to format that. Hold on. See, live's just way better. It gives me the opportunity to mess up lots of stuff. Format symbol. Let's go 3,000 bars. Hit OK. Now I'm going to go zip. Here we go. The day is 21st. All right, so now I'm looking for 9:30. Where are we at? 9:30. Okay, here's 4. Here we go. Now we're cracking. There's 8. There's 9. Here's 9. Okay, here we go. So at 9:30, you see this color right here? So I'm going to mark this. And then I'm going to move this over here so you can see it. You can see pre-market. It was 9:16, 9:20, 9:27, 9:28, 9:29, 9:30. Boom, boom. You see that right there? I'm going to blow this up just a little bit bigger so you can see it. Does everybody see that? So that's where I had to get long. Pre-market, this was all going down, and then it said 9:30, blue, blue. So I had 2 of those bad boys. Does it make sense? So then all I did is I placed a trade with 4 contracts and a 20-point stop loss. As soon as it went up 10 points, I cut half of it loose and moved my stop from entry minus 20 to entry minus 10. Now, armed with the information that you now know, what is this telling you? Okay. I'm going to zoom this out a little bit so you can see. Armed with how you know gaps works now, what are the highest percentage trade setups? It'd be half a gap fill, right? So what we did is when we went up here, plus 10, boom, out of half. Moved up the stop, and then we said, boom, we're at a half a gap fill. We're going to cut a quarter of that loose. And then we just had a quarter left. And then when it started rolling over, and we're like, we're out. So here's the deal. Like if you're long a gap trade, good targets are half a gap fill, full gap fill, or 40 points. Those are sweet spots, right? And then a half a gap fill is going to act like resistance, and the full gap fill is going to act like resistance. So let's just zoom out here and see if that actually did act as resistance. Because after they fill, they then become resistance. So right there, look. Half a gap fill, boom, resistance. Full gap fill, boom, resistance. Now, it's not perfect. What time frame, what time was your long entry? At the open. At 9:30 was my open. At 9:30, I had 2 blue TTM on a 50 tick, and I said, long. I didn't wait for a confirmation or permission from my mommy or my grandmommy to get long. I just long Dow mini, 4 contracts. 50 ticks on the Dow. How many ticks on the ES? I would probably use 233 ticks on the Dow. That would probably give you a better trade setup on the Dow, or on the S&P, sorry. I think you actually went long a little before 9:30. I think it should have been right at 9:30. Yeah. You entered with market orders or limit on. When I'm doing gap trades, I usually go market. How long after the open? So let me see if I've got any more questions. So anybody have any other questions on that? I think we got a decent. So one thing, let's go back here and look at the other gap trades, and I'm want to show you really quickly. Okay. So and you can see kind of how here's a gap fill. Look at there. There's a gap. I like using a 2-minute chart, a 2-minute time frame for gaps, but you can use whatever you want. And these are, I'm just going to change the time frame on this chart to like 5 minutes. Okay? So you can see the gap fills that have happened over the last few days if you would have done them properly. So half a gap fill today, a pretty much a half a gap fill yesterday. The day before you had a half a gap fill and a full gap fill. Does everybody see that? So this is where it closed. That's where it's open. So half a gap fill, and a full gap fill. Here you had a half a gap fill and a full gap fill. Here you had, all right, so here's one that failed. Here's one that did not work. If you notice right here, this is where it closed. Let's just say there's as high as it got. So it was a small gap, but there was no fill. So that's the first one in the past few days that did not work correctly. And then I don't think my charts go back any further than that right now. All right, so let me see what else I got here on my PowerPoint. I think I've got a few more things to share with you. All right, we went live. Where are you at, Mousy Mouse? There you go. All right, so counter trend bounce. Remember from the notes, and we just covered that, a half a gap fill is going to act as support or resistance depending on which way you come. So if we're doing a half a gap fill when it comes up here, it's a good sell opportunity or a good profit opportunity. If you're already long from down here, sell. If you're a counter trend trader, you can short this with the anticipation of it failing and rolling back over, because remember, index futures go like this. They're not the best trending thing in the world. Full gap fill, good counter trend trade, full counter trend trade. And then 40 points is your sweet spot. And then if you're going to do a counter trend trade, one counter trend trade that I really enjoy that I think you're going to like is an 85 to 115 points on the Dow. Anytime the Dow gets up about 85 to 115 points, I'll just do a fade trade on that. I'm just throwing that in there on you. And then also always be looking out on the first 30 minutes. Usually the first 30 minutes is either the high of the day or the low of the day. And it's pretty commonplace that the first 30 minutes will either establish the high for that day or the low for that day. So it's super important that you pay attention to that type of information. All right.